Welcome to the Deep Dive. Today we are all about uranium, specifically a company called Cameco Corporation. So let's break down their business, financials, and what the experts are saying, so you can understand what's really going on with this stock.
Great choice. Cameco is fascinating, especially right now with all the buzz around nuclear energy. Let's dive into those reports and see what we can uncover.
Okay, so first things first.
Yep.
What does Cameco actually do? I get that they're a uranium giant, but give me the Uranium 101 rundown.
Think of it this way. The world is craving clean energy, and nuclear power is a major contender. But those nuclear plants need fuel, and that fuel comes from uranium. That's where Cameco steps in. They're the leading provider, covering the whole process, mining, milling, and even refining uranium into those fuel bundles that power the plants.
So they're not just digging it up and selling it raw, they're involved in the whole shebang.
Precisely. And that's a key part of their strategy. That integrated approach gives them more control over the supply chain and helps them stay profitable even when uranium prices are fluctuating, which they can do. It's like having a built-in defense mechanism against market volatility.
Interesting. So it sounds like they're in a good position strategically.
Yeah.
But what about their financials? Are they actually making money?
Let's look at the numbers. Their latest report shows a really strong Q3 performance, with increased dividends, which is always good news for investors. But what's even more interesting is this recent debenture offering they secured for a cool $500 million.
Debenture offering. Sounds a bit complicated.
It's simpler than it sounds. Basically, it's a type of bond they issued to raise capital. The fact that they attracted that much investment tells us the market has confidence in Cameco's future prospects. It's a strong vote of confidence.
So they're attracting investment and performing well financially. Got it. But what are the experts saying about Cameco's long-term potential? Are they bullish, bearish, or somewhere in between?
The overall sentiment seems to be cautiously optimistic. Many analysts see Cameco as a prime beneficiary of the growing demand for uranium as nuclear power gains more global acceptance. For example, Goldman Sachs has a buy rating on them, and Scotiabank even went so far as to raise their price target.
So positive signs, but why the caution part? Is there something they're worried about?
Well, no investment is without risk. The uranium market can be volatile, with prices going up and down like a roller coaster sometimes. And the nuclear industry as a whole faces its own set of challenges, like public perception, waste disposal, and all those regulatory hurdles. So the analysts are weighing the potential with these inherent risks. It's a balancing act.
That makes sense. It's never a guaranteed slam dunk, even with a company that seems as well positioned as Cameco. Now, I'm always curious about those little details that really paint a picture of a company. Anything in those reports that particularly stood out to you?
Definitely. A few things really jumped out at me. First, there's this phrase they use, narrow economic moat. It sounds a bit medieval, right?
It does. Like Cameco's got a castle and a moat to protect their uranium riches.
Exactly. But in business terms, a narrow economic moat means they have a unique competitive advantage. That helps them stay profitable even when uranium prices are low. Think of it like having a secret weapon in a volatile market.
Okay, so they're not just riding the uranium wave. They've got some built-in resilience. What else caught your eye?
Well, there's this intriguing MOU they signed with Sask Power and Westinghouse, and it could be a game changer.
MOU. That's a memorandum of understanding, right?
Yeah.
Basically, they're agreeing to explore something together.
You got it. And what they're exploring is potentially huge, supplying not just the uranium for reactors, but the reactors themselves. This could significantly expand their role in the nuclear energy landscape.
So they're going from supplying the ingredients to building the whole kitchen. That's ambitious. Tell me more.
Well, Sask Power is a major utility company in Saskatchewan, and they're looking at expanding their nuclear capacity. So this MOU is essentially Cameco teaming up with Westinghouse, a leading reactor technology provider, to offer Sask Power a complete package deal reactors and fuel all in one.
That's fascinating. It sounds like a powerful alliance. But how likely is this to actually happen? Is it a sure thing or more of a wait-and-see situation?
It's important to remember that an MOU is just the first step. It signals their intent to explore this possibility. But there's still a lot of work to be done before any concrete deals are signed. Think feasibility studies, regulatory approvals, financing, and all those details that make big projects happen.
Right, so it's not a done deal just yet, but it definitely suggests that Cameco is thinking big and strategically about their future in the nuclear energy space. What else did you find intriguing in those reports?
One last thing that really stood out to me was this phrase they used in their Q3 earnings report, Tier 1 cost structure. What this means is that they've been intensely focused on becoming one of the most efficient uranium producers in the world.
Okay, so they're running a tight ship. That sounds promising. But how does that actually translate into results?
Think of it this way. Imagine two car manufacturers both making high-quality electric vehicles. One manufacturer has streamlined their production process, sourced the best materials at competitive prices, and optimized their entire supply chain. The other manufacturer, well, let's just say they're not quite as efficient. Who do you think can offer a more competitive price in the market?
Okay, I see where you're going with this. The efficient manufacturer has a clear advantage. So in this analogy, Cameco is the super efficient car maker.
Exactly. Their Tier 1 cost structure means they've honed their operations to be among the best in the world. And in a market as complex and potentially volatile as uranium, that kind of efficiency can be a real game changer. It means they can withstand price fluctuations, maintain profitability, and even potentially undercut their competitors on price. It's a powerful position to be in.
So they've got this narrow economic moat protecting them, and they're running a super efficient operation. It sounds like they're building a fortress in the uranium market.
That's a great way to put it. They're not just surviving, they're thriving. And as the demand for nuclear energy continues to grow, they seem well positioned to capitalize on that trend.
We've covered a lot of ground in this first part of our Cameco deep dive. Their business model, financials, expert opinions, and even some of those intriguing little details that you always pick up on.
Exactly. And we've only just scratched the surface. There's so much more to uncover about Cameco, the uranium market, and what it all means for investors.
We'll be diving into all of that and more in the next part of this deep dive. We'll be unpacking that MOU in more detail, taking a closer look at the dynamics of the uranium market, and really digging into their latest quarterly earnings report to see what it tells us about their recent performance and what we might expect in the future.
Welcome back to the deep dive. When we left off, we were discussing Cameco's intriguing move to potentially supply not just uranium, but entire reactor setups.
You're talking about that MOU with SAS Power and Westinghouse, right? It sounded like a pretty big deal, but I'm still a bit fuzzy on the specifics. What kind of reactors are we talking about here? And what are the potential challenges they might face?
So the MOU doesn't specify the exact reactor type yet. That will be part of the feasibility studies they conduct. However, given the current trends in the nuclear industry and Westinghouse's expertise, it's likely they're considering small modular reactors, or SMRs for short.
SMRs, those are the ones that are like miniaturized versions of traditional reactors, right?
Exactly. Think of them as more compact, flexible, and potentially even safer than their larger counterparts. They're designed to be more cost-effective to build and operate, and they can be deployed in a wider range of locations.
Okay, so SMRs are kind of like the next generation of nuclear technology.
You could say that. They're generating a lot of buzz in the industry because they address some of the concerns that have traditionally been associated with nuclear power, like cost overruns and long construction times.
So if Cameco is positioning itself to supply SMRs, that suggests they're really thinking long-term and strategically about the future of nuclear energy. But you mentioned potential challenges. What are some of the hurdles they might face?
Well, first off, SMR technology is still relatively new. There are only a handful of SMRs operating worldwide, so there's still a lot of learning and development happening.
So it's a bit of a gamble. They're betting on a technology that's not fully proven yet.
There's always an element of risk when you're dealing with cutting-edge technology. But Cameco isn't going at it alone. They've partnered with Westinghouse, which has decades of experience in nuclear engineering and a strong track record in reactor design and construction.
Okay, so they've got a solid partner to help them navigate those technological challenges. What about the regulatory hurdles you mentioned earlier? Are those specific to SMRs, or are they just part and parcel of the nuclear industry in general?
It's a bit of both. The nuclear industry is heavily regulated, and rightly so. Safety is paramount, and there are stringent requirements for licensing, construction, operation, and waste disposal. But with SMRs being a newer technology, there's still some regulatory uncertainty. Governments and regulatory bodies are still developing frameworks and standards specific to SMRs.
So it's a bit of a waiting game on the regulatory front. They need the rules of the game to be clearly defined before they can really move forward.
Exactly, and that can take time. It's a process that involves not just technical assessments, but also public consultations and political considerations.
So there are technological challenges, regulatory hurdles, and probably a whole host of other potential roadblocks along the way. It sounds like this MOU is far from a sure thing. But if they do manage to pull it off, What kind of impact could this have on Cameco and the nuclear energy landscape in Canada?
If they succeed, it could be a real game changer. Imagine Saskatchewan, a province known for its vast uranium resources, becoming a hub for SMR technology and deployment. It could position Canada as a leader in this emerging field, attract investment, create jobs, and contribute to a cleaner energy future.
So it's a high risk, high reward kind of situation.
Yeah.
But it definitely aligns with what we've been discussing about Cameco's ambitions. They're not just content with being a uranium supplier. They want to be a major force shaping the future of nuclear energy.
Absolutely. And this MOU with SaskPower and Westinghouse is a clear signal of that ambition. It's a bold move that could have significant ripple effects throughout the industry.
Okay, so we've unpacked this MOU in detail and explored the potential challenges and opportunities it presents. Now, I want to shift gears a bit and dive into the uranium market itself. Is it really as hot as it seems? And what are the key factors that could impact the price of uranium in the coming years?
That's the billion-dollar question, isn't it? And as with most commodities, there are a lot of factors at play. But let's start with the big picture. We're in the midst of a global energy transition, with many countries looking to reduce their reliance on fossil fuels and embrace cleaner alternatives. Nuclear power, with its reliable, carbon-free energy generation, is increasingly being seen as part of the solution.
So more demand for nuclear power equals more demand for uranium, which is good news for Cameco, right? Simple supply and demand economics.
Exactly. But, as you know, things are rarely that simple. While demand is certainly a key driver, there are also significant supply-side factors to consider. The uranium market has been through a period of underinvestment in recent years, which has led to production constraints. And then there are the geopolitical risks, which are always a factor in the commodity world.
You're talking about things like political instability in major uranium-producing countries. We touched on Kazakhstan earlier. Is that what you're referring to?
Kazakhstan is a prime example. It's the world's largest uranium producer, so any disruptions there can send shockwaves through the market. They've been experiencing some political unrest, and that's created uncertainty around their uranium output. And then you have other factors like mine closures and production cuts in other key uranium-producing regions.
So you've got this combination of rising demand and constrained supply. It sounds like the perfect recipe for price volatility.
You're absolutely right. The uranium market is notoriously cyclical, with periods of boom and bust. And the current dynamics suggest we could be heading towards a period of higher prices.
Okay, so that's the big picture. But what are some of the specific factors that could impact uranium prices in the coming years? What should investors be watching for?
Well, one key factor to watch is the pace of nuclear power plant construction globally. If more countries follow through on their plans to expand their nuclear capacity, that will translate into increased demand for uranium, which could push prices higher.
Makes sense. More nuclear plants equal more fuel needed. What else should we be keeping an eye on?
Geopolitical events are always a wild card. Any instability in major uranium-producing countries like Kazakhstan, Niger, or Namibia could disrupt supply chains and drive up prices.
Okay, so geopolitical risks are always on the table. Anything else?
Technological advancements could also play a role. For example, if there are breakthroughs in nuclear waste recycling or the development of more efficient reactor designs, that it could impact the demand for uranium in the long run.
Interesting. So it's not just about supply and demand, it's also about how technology evolves. It sounds like the uranium market is anything but predictable.
It's definitely a dynamic and complex market, which makes it all the more fascinating to analyze. And for companies like Company, navigating these market dynamics will be crucial to their success.
Speaking of Cameco, one thing that stood out to me in their reports was this mention of their Tier 1 cost structure. We talked about it earlier, but I'd love to dive a bit deeper into what it means for their business and their competitiveness.
Absolutely. Their Tier 1 cost structure is a key part of their success story. Remember that analogy we used earlier, comparing Cameco to a super efficient car manufacturer?
Yep, I remember. They're all about optimizing their operations to produce uranium at a lower cost than their competitors.
Exactly. And this gives them a significant advantage in the global market. They can withstand downturns in uranium prices better than their rivals and still remain profitable. It's like having a built-in shock absorber for those market bumps.
So their efficiency helps them weather the storms in a volatile market. But how did they achieve this Tier 1 cost structure? What are they doing differently?
It's a combination of factors. They've invested heavily in modernizing their mining and milling operations, leveraging technology to improve efficiency and reduce waste. They've also focused on securing long-term supply contracts and building strong relationships with their suppliers, which helps them control costs.
So it's not just about being efficient in their own operations. It's about managing their entire supply chain strategically.
Exactly. They're thinking holistically about their business from the mines to the market. And that's a key part of their competitive advantage.
Okay, so they've got this narrow economic moat protecting them. They're running a super efficient operation, and they're strategically positioned in a market that seems poised for growth. It sounds like Cameco is firing on all
Yeah,
cylinders.
that's a great way to put it. They seem to be in a very strong position, both operationally and financially. And as the world grapples with the challenges of transitioning to a cleaner energy future, Cameco is well positioned to capitalize on the growing demand for nuclear power.
We've covered a lot of ground in this second part of our Cameco deep dive. We've explored their ambitious plans for the future, the intricacies of the uranium market, and how their focus on efficiency gives them a competitive edge. But there's one piece of the puzzle we haven't touched on yet: their latest quarterly earnings report.
Ah, yes. The numbers that often tell the most compelling story.
Exactly. So let's dig into that report in the final part of our deep dive and see what it reveals about Cameco's recent performance and what it might signal about their future.
If you're enjoying this deep dive into Cameco, be sure to hit that subscribe button and the notification bell so you don't miss the final part. We'll be back soon with more insights and analysis.
Stay tuned. We've got more Cameco to uncover. Welcome back to the deep dive. We spent the last two parts really getting to know Cameco, their business, their big moves, and the market they're in. But now it's time to look under the hood, see how their engine is running. Let's talk about those quarterly numbers.
You're talking about their Q3 earnings report, right? It's a gold mine of information. It paints a picture of a company that's not just riding the uranium wave, but paddling like crazy to stay ahead.
Give me the highlights. What are the key takeaways that jumped out at you?
First off, their revenue is up significantly compared to last year. We're talking double-digit growth.
Wow, that's impressive.
It is. And it tells us their strategy of increasing production to meet that rising demand for uranium is paying off.
Yeah, so they saw the demand coming and ramped up production to meet it. Smart move. But revenue is only part of the story. What are their profitability? Are they actually making more money?
That's the even better news. Their net income has also seen a healthy increase, showing improved profitability. They're not just selling more, they're making more from what they're selling. And what's great for investors is that they're sharing the wealth. Their dividend payments have gone up too.
Wait, hold on. Didn't we talk about their Tier 1 cost structure and how they're all about efficiency? Is this report showing that in action?
Absolutely. Remember that I told you with the car manufacturers? Cameco is proving that they're the efficient one, producing uranium at a lower cost, which leads to higher profit margins. This report backs that up. It's not just talk. They're walking the walk.
Okay, so we've got a company in a growing sector, strong financials, a strategic focus on efficiency, and a willingness to seize the moment. Cameco seems to be hitting all the right notes.
They're like a well-oiled machine, firing on all cylinders. And as the world continues this push towards cleaner energy, Cameco is in the perfect position to capitalize on that trend.
But as you always remind me, no guarantees in the market, right?
You got it. Uranium prices can be unpredictable. Geopolitics, regulations, even new technologies, they could all throw a wrench in the works.
So no crystal ball, but what's your overall take on Cameco? Should our listener be running out to buy stock?
Well, I can't give financial advice, but I can say this. Cameco is a company worth keeping on your radar. They're a major player in a strategically important industry, and their performance suggests they're doing a lot of things right.
But, as always,
Do your own research. Investing is a personal decision. Understand the risks, consider your own financial goals, and make an informed choice.
well, I think this deep dive has given our listeners a solid understanding of Cameco and what they're all about. We explored their business model, financials, the dynamics of the uranium market, and even their ambitious plans for the future. It's been quite a journey.
It has. And remember, if you enjoyed this deep dive into Cameco and want more insights and analysis on other companies and industries making waves, be sure to hit that subscribe button and the notification bell so you don't miss out. We're constantly exploring new companies and ideas, bringing you the information you need to make informed decisions.
We're here to help you navigate the complex world of investing, one deep dive at a time.
Thanks for joining us on the deep dive.